Hi all, welcome to Scientific Investing, and in today's video we are going to talk about the Q4 FY24 results which are ongoing. Before we start, standard disclaimer, I'm a SEBI registered research analyst. Whatever we are discussing, please do not take any stock for recommendation purposes. Please do not consider as a buy or sell advice. I may have positions in some of the stocks. So you must be thinking why I do this exercise, and this is not something which I'm doing for first time. I do it every quarter, and there are certain key reasons. The first reason is identification of stock ideas, because in the results you get a lot of interesting ideas, and some of the ideas you pick, you study in detail, and then you might be able to build your conviction. Some of the ideas I have generated have come purely by tracking the results. Second is to understand the overall valuation attractiveness and froth in the market. And also based on the condition of market of large cap versus mid cap, small cap, equity, to take the decisions related to asset allocation and buying and selling, seeing how the results are turning out. Also, as the result season has just started, and I think we are 1 week into the result. So far, we have covered 132 companies which have declared their results. Companies available with year-over-year data. That means the same quarter last year versus this quarter, to be able to compare 128 companies. And there were certain companies which made losses. And if we take those companies, it might screw up the results. So if we exclude those companies, we have 180 companies, 18 companies. So this is the data universe right now we are looking at, which is less than 10%. It will take more time as we get more and more data about the companies. We will get much better insights regarding how the results are turning out. But nonetheless, still, it is very attractive to look for the kind of insights we have started looking by looking at the results. So let us go through. So we have divided this analysis into 3 parts. Part 1, where I will give you idea of how the overall market result is, how Nifty 50 result is, how mid cap is, how small cap is. And then we will deep dive into which are the sectors which are doing well in terms of results, which are the company, and then we'll get into which are the companies where we have got some extraordinary result and what is doing well, what is not doing well, how to look at some of the results, how to deep dive some of the results. Also at Twitter, I am covering these results in detail. We are covering the results by dissecting the overall result in terms of how the quarter-over-quarter performance has changed. Last 4-5 quarters of performance have changed. Also, we study a lot of conference calls and we try to identify what has happened in company. So we put our notes on Twitter. You have my Twitter ID. So you can, track me to track all these results in detail. So now let us go ahead and let us look at how the Q4 FY24 results have started on an overall basis. If we look overall, 132 companies, and the year-over-year sales growth rate has been 16.4%, and year-over-year PAT growth rate has been 16%, which looks very healthy. There is only one catch, and that is why it is very important to look at data with all the nuances. This result also covers the result of HDFC Bank, which is now a merged entity of HDFC Bank and erstwhile HDFC Housing Finance Company. Now, if we look at the Q4 FY23, that time there were 2 separate companies, and now they're combined into one company. So we cannot take HDFC Bank because it will not be an apple-to-apple comparison, because the result will look inflated. So that is why I'm giving you the star mark number. The star mark number is the number without HDFC Bank result, ex-HDFC. So when we look at the market result overall, ex-HDFC Bank, it's 12.7% sales growth rate and 12.1% profit growth rate for these 132 companies. The other thing is how the PAT margin shaping up, and why I am highlighting the PAT margin. Those of you who have seen my last video on the Q3 results, I had highlighted that video is there on a YouTube channel. I had highlighted that the majority of EPS gain is coming not by the sales growth, but by margin expansion. And margin expansion has a limited shelf life. Beyond a point, margins cannot expand. So I am trying to track the result to understand if there is any chances of margins stopping out. And if we look at the last year quarter, we were at 11.8% margin. And this year we are, at least for these 132 companies, we are at 11.7% margin. So at least this quarter, I don't see a year-over-year margin expansion so far, which we had been seeing in last 2 quarters. where on a 10% sales growth rate, there was 25% profit growth rate because the extra additional 15% growth rate was coming because of margin expansion. This time, the PAT growth is little lesser, but again, this is hardly 10% of the data. We need to wait for more data. And what is the valuation? It is trading at 25.19, which is the Nifty 500 valuation. I have given the similar numbers for those 28 companies with YOY data, 18 companies excluding loss-making companies and all of that. So broadly, if we look at Nifty 50, out of 50 companies, 11 companies are out with result. 10.5% is the sales growth rate, 10.4% is the PAT growth rate. Now, all these numbers, this number is excluding HDFC. And this is where we are on the margin, and Nifty trades at a PE of 22.75. If we look at Nifty next 50, another 50 companies, 8 results declared. Here, the results are relatively bad. If we look at Nifty mid cap 150, out of 150 companies, 25 companies, 16% of the companies have come out with the result. Very good performance in the mid cap space, 29, at least so far, 29% sales growth rate, 25% profit growth rate. But the thing is, the margin is again lesser, and hence now what was happening in the last quarter, now things have changed in terms of a lower profit growth rate than the sales growth rate. And this trades at 35p. If we go at small cap, 34 results captured out of 250. Here, if you remember my last presentation, even in Q3, the small cap sales and profit growth rate was not great. And here also compared to mid cap, it's not great, and 9% margin. And then rest of the stocks have done around 15 and 13%, and both trading around 30p. So this is the overall result so far for the market, dissecting by caps. Now let us look which are the sectors where we have got a good result or a bad result. So these are some of the prominent sectors. I don't want to go for industries where we have only 1 or 2 companies. So I have discarded because it's difficult to create a pattern there. So I'm trying to cover more companies where we have at least 3 or more companies in that industry. And if we look, the industrial engineering continues to do well with 50% sales and PAT growth rate. Finance and investment, it's not bank. It has all the other financials like your NBFCs, your brokerage companies, your asset management companies and all. Very, very good result, and 23 results out with 44% sales and 37% profit. Breweries is one business where I see now multiple companies doing well. Construction, infra and construction is another sector which is in momentum with very good, tailwinds and continues to do well. Banking, this number involves HDFC, we'll dissect and we will see. Hotel is another sector which continues to do well. And some miscellaneous companies I will cover. If you look results which are okayish, computer software, large and medium, nothing, not great result. Chemicals, not great result. But I will talk more about it. See, if the result is bad for multiple quarters and it is improving little bit, that is a different scenario than a company or a sector which is going into bad result for the first time after good result. So when you have a sector going through bad set of results quarter after quarter, the quarter improvement becomes more important. And that is why I'm telling you that, a lot of these results we are covering on Twitter, where we are bringing all the details. I'll show you with one example soon how you have to look at these results. And relatively, the medium and small computer computer companies, they have done, IT companies, they have done much better than large. And this is where your TCS and all is coming with very flat kind of result, whereas your medium-sized companies like Persistent, they have relatively better result. And I won't call it because pharma has more than 60, 70 companies, when we track the top 1,500 universe. I will not read more into it, but as of now, it looks weaker. Now, which are the sectors which we have seen? Which are the companies? Let's look at. So if you look at industrial, you have Elecon Engineering coming with very good result. Imco Elecon coming with very good result. KP Green Energy coming with very good result. Again, mind you, these are only PAT numbers. I'm not getting into balance sheet. I'm not getting into cash flows. I was talking about breweries. So some distilleries, Piccadilly, both the companies have come with fabulous results. If we talk in terms of real estate, Anantraj is one company which stands out. And actually, it is doing good results from quite some time. because of its data center business. So that is why I'm telling we should keep monitoring the result. We might find a company which showed a great result for the first time and the valuation still could be in favor and it becomes a good case study to study. Hotels continue to do well. Banaras Hotels, very good result. Indian Hotel, very good result. In miscellaneous, we have companies like Just Dial, which is into online listing business, which has done really well. MCX has done very well. And actually, Just Dial was one company which we studied 4-5 months back in our practitioner program. I think we covered this company in the month of November. At that time, this company was trading around 6,300 market cap, around 750 prices. And on 6,300 crore market cap, there was 4,300 crore cash on book. And even last quarter, so this company came on radar when I was studying the Q2 result. And in Q2, they had given almost 15% kind of growth rate. And then in Q3 also, they gave 15%, 20% kind of growth rate. And again, in Q4, now they have come with good result with almost 38% kind of profit growth rate. So this is why we ended up studying Just Dial. So we cover these kind of companies in our practitioner program. However, there is another thing. In practitioner, we have a lot of tools, we have Excel tools, we have trading view indicators. All of this is to help to do better research, better productivity, better ideation. And in trading view, in our Simba system, which is scientific investing market breadth analyzer, we have two proprietary indicators to identify interesting ideas, Ghumega and Machayega. Which is one is the stage 2 analysis stocks and one is price volume action stock. And if you see, interestingly, Just Dial, during that time, Just Dial also started coming in our both in our Ghumega and Machayega. So this is how we try to build. We have built a system, and in our process, this is how we leverage the process. We leverage the tools and technologies. We identify the ideas and we study the ideas. So in case you are interested in the practitioner membership, where you get a lot of real-time company case studies, sector case studies, market coverage. So we do very, very detailed sessions on market on these kind of company study. We do weekly meetups, webinars. We also have tools built in Excel for stock analysis, automated stock analysis tool, automated competitive analysis tool. We have built proprietary indicators. We have built a Simba system to track the market, identify ideas at sector stock, all the levels. So in case you are interested to explore, you can go to our website, learn.scientificinvesting.in, and you can go through this practitioner membership. The link is also there in the description box. So coming back to the list of companies, finance, you saw in finance, you had almost 23 companies, the financials part, and some very, very interesting companies. So one pocket, if you see the whole set of AMC companies, they have done really well. All the three AMC companies coming with 40 to 90% profit growth rate, 30 to 40%, sales growth rate. Again, in our practitioner 1.5 years back, when these companies were available at 15, 16 kind of P, and the market was writing them off, we had done a detailed 5-hour super session on AMC companies. And it's good to see these companies, now they're performing well. The other set of companies, if you see, you have certain brokerage companies, you have companies in mutual fund, again, AMC plus brokerage, Motilal, ICICI Securities. That is another thing which have done well. So when the stock market does well, these companies do well. Then you have the wealth management companies like 361 and all, which have come with good result. Some very interesting companies like Shriram Finance. I would suggest you go and study the company. Look at the valuation of this company. Might be really worth looking at this time. Another wealth management company, Anand Rathi. So you can see there are a lot of good results coming in financials, which are riding the stock market theme because we are in a bull market. Coming to private banks, if you remove the HDFC Bank, and I already highlighted, the results are not great. And there is a very, very visible pattern coming out. Most of the banks are doing good on the sales growth rate, but they are not doing good on the PAT growth rate. We need to go and study. My hunch is it is because of banks losing their CASA growth rate, which is killing in terms of their NIM margins, and that might be hitting up to the bottom line, because still I don't think we are having any kind of NPA issue. So it is more to do with the margin spread issue, which might be coming because of CASA, but this is a clearly visible pattern. I think Axis is the only one which has surprised the market, and that is why after the results, the stock was almost 6% up. So I think we need to be a little cautious on the banking side in terms of spread and CASA related issues. The IT results, as I said, the big companies, big East TCS, very, very average result. Wipro, average result. LTI, Emphasis, very average result. Again, 6 months back, I had done a video on my YouTube channel highlighting 20 years of IT sector data, IT index for large companies. And I had my view that I don't see these companies doing really well, because for the kind of growth you had and the kind of valuation you have, it was logically not justified. Again, price moves 10% and we all start shouting that abhi to momentum aa gaya. But look what has happened to index. Again, you are back to the same place and you don't have great result. So one suggestion, that is what I follow. Don't get driven by a 10% price narrative moves. Don't forget the fundamentals. It's the fundamentals which drive the price. Charts बनते हैं, charts बिगड़ जाते हैं. But अगर आपका fundamental study सही है और वो play out हो रहा है, तो that is how stories will play out. But yeah, the place to hide has been some of the mid caps. But again, let me remind, these mid caps are not cheap. They're trading at 50, 60 times valuation. And then if the quarter on quarter result is deteriorating, market may not like it. You see Tata Elxsi, which was darling of the market, now flat result. And we were willing to pay 70, 80p. So look what happens to these kind of result. And I am seeing this is the third or fourth cycle of Tata Elxsi I'm seeing. Since 2015, there have been, I think, two occasions or three occasions I have invested in Tata Elxsi. And I think once the stock might become attractive at one point of time, it might be fourth time I would be looking at it, but that is how the market cycle works. Chemicals, if you see, not great results. Like I think Himadri is the only company coming with great result, and actually Himadri stock price has done really well. It's a lesson for all of us how we should keep tracking companies, because some companies do well respective of sector. The other companies, if you see, you are seeing only this quarter result, but my sense is if you go and look and connect, you will see that earlier quarters, there was a deceleration in the result sales. Now it looks like it is bottoming out. Still, there is no growth, but the degrowth is bottoming out. Even in pharma, some of the pharma companies, this Laurus result may not look great. And let me explain with an example. So a 4% sales growth rate and minus 27% profit growth rate, it may not look great. But when you look at last 6 quarter of trend, see, after 6 quarters and even before that, this is the first time when on a TTM basis, Laurus has seen sales improvement. This is the first time Laurus has seen a sales growth rate. The profit degrowth rate is also slowing down. Looks like the margin bottomed out 2 quarters back, and this is the first quarter where there is a sign of margin improvement. So that is why I'm telling, a company delivering excellent result available at 60, 70p, which has already performed. And then if the quarterly result is not great to the previous quarter versus a company which is down 50% with pathetic results for 5, 6 quarters. And then there is a slight improvement. Market will treat them in 2 different ways. That is how you have to look at the data. And that is where we are putting a lot of these kind of insights on Twitter. Again, these charts are all automated. We have built tools to, generate these charts because manually it's not possible to do for 1,500 companies. So this is how we work in the practitioner and we try to analyze companies. So I have covered all the companies. I hope it gave you a fair idea of where we are going in terms of result, what are the sectors looking interesting, how to look at the sectors doing great, but how to look at also sectors and companies which have not doing great, but how to study the results as the market progresses and as we get more and more results. Maybe on every 2-3 weeks, I will try to give you more update and come up with more insights. I hope this video was useful. If you like the video, if you like our content, do share, do like, do subscribe so that we can get maximum reach. I will see you soon. Thank you.